However, uh, just be aware, probably won't play out as it's never going to be that easy. There's going to be some kind of variation in the whole mix. I mean, if you want some kind of analogy to this, think about how you felt through the entire $50 to $60,000 topping pattern for Bitcoin. It looked, in hindsight, like it was slowing down, but it still feels really damn bullish when you're up there at 64,000, right? It still feels real good. But when in hindsight, when you look back, it didn't behave the same way. Everyone was expecting a blow off top. We didn't get it. And as a result, people were mostly blindsided by it. So that's the same kind of vibe feeling that I think you walk into this trade with. And you just understand that it's probably going to be something like that, but it won't be as textbook. And just keep your kind of mind open on how this trade may play out.
Yeah, because it was like the Coinbase sort of, looking back and even during the time, it looked like the Coinbase was going to be, that sort of stopping us in our tracks at 65, do you mean, sort of thing. That happened pretty much to the day, didn't it? Do you mean? But we didn't get the blow off top. But I do feel this time there will be a blow off top around, the March, March, April time. And I think that's our cue if we get one, do you mean? Because we haven't had one for a while, but if we do get this bullish 4, 5, 6 months, do you mean, and driving into, things going crazy, then I think that's a big signal, isn't it? Do you mean? So that's something to look forward to.
Yeah, exactly. I mean, look, I think overall, would you rather own fiat currency or BTC or even ETH? And I think the answer to that question is, well, at least in my opinion, is pretty black. Oh, have I lost everyone?
I'm here.
Oh yeah, cool. Yeah. So look,
Cut out
that's that.
for a few seconds there.
Yeah, TXMC, you got any thoughts on all the above?
Well, I think, of course, I wasn't paying as much attention on chain and didn't have nearly as much understanding of it during the market earlier this year. But I think that in retrospect, there were a lot of things about that market that could have told us it was the top, even though it did feel really good up there. And I think that maybe this time around, we'll certainly be more aware of that, or at least we'll have an idea of what to look for. It'll probably be different in its own way because every market is unique in a kind of its own way. And also, I haven't yet formed a crystallized idea of what I think this market top will look like or how big it'll be or when it will come. Because in truth, I'm still a little perplexed by this idea that a lot of people have. No one in this room has proposed this, but a lot of people on Twitter have this idea that we go through these like identical cycles, and there are fractals, but really every market has been very different. The 2011 market, the 2013-14 market, like the little double market, the one in 2017 and at the end of 2017, and then this year. They've all actually been quite different in at least their appearance and how long they took, and their percentage returns were all a little different. So I think that every market is very unique. We have low sample sizes on what to really expect, but we can expect supply and demand dynamics to play out in a similar way underneath the hood. And I think that's what I rely on. I think some of the stuff you said, Check, about like the way the long-term holders behave, certainly paying a lot of attention to that. Not just the long-term holders, but like the illiquid types and just all of the different ways we chop up hodler classes. Those are the things that I'm really going to be paying attention to. I don't know how long the bull run can last because I think that macro is playing a really difficult to discern factor. It's not the same conditions we've had before. These are uncharted waters for us economically, globally. And so I just think that's something that I certainly am having trouble mixing into what to expect about what Bitcoin can do. But I do think that when we start creating new highs, momentum's going to pick up. It's not going to double top and reverse. I don't think that's in the cards anymore outside of a black swan. And so I think that when it does pick up, momentum's going to pick up and that this could go on well past the new year. I don't think we're going to have it end nice and tidy at the end of December like we have in the past. I think that's pretty much assured.
Yeah, I agree with all of that. I think it very much is this supply and demand dynamics, and the one thing that's a constant is human being psychology, right? And we looked at this in I think it was yesterday's video, where you've essentially got Google Trends where the AI has 100% accuracy at picking the exact top. 100% of the time, their search interest is like within a week of the exact top of the market. And simultaneously, we can see them on chain, which is remarkable, right? You see them flow in, whether it's active addresses or transaction counts or fees or whatever. And people just don't seem to understand that the maximum opportunity is buying in the bear market, right? Buying at the absolute end when all the smart money is stepping in. And the smart money has essentially pushed us back to 58K, right? I mean, we're a couple of K off, 6K off the all-time high. And essentially there is no muggle interest, which is just incredible. So what I think is it very much is that supply and demand dynamics. As TXMC was saying, like there are these similarities, but I actually find that then cycles, they're actually internal to the cycles. So if you look at 2013, that double pump rally, note how both of those pumps look very similar to each other. And then 2017, the 2017 peak and then the 2019 peak look very similar to each other, right? That same behavior, it's like that recency bias plays out. And then again, we saw 2021 where we had this big rounding pattern at the top. We sold off down into the 29,000 floor. Then we rallied up and we had another miniature like rounding curve over into that $40,000 floor. So Bitcoin, for whatever reason, it does these like inbuilt miniature fractals where it kind of plays out one and then the mini version, right? One and then the mini version. I don't know whether it's people. I mean, how much of it is just human beings acting in a free market? How much of it is bots and algorithms and stuff playing up? I don't know. But we seem to see these miniature behavior cycles over and over again. And this is why I actually think that people say how much funding rate is too much funding rate. I don't know. I don't think anybody knows because we've seen serious flushes of leverage, both to the upside and to the downside, on all sorts of funding rates, right? Normally it happens when funding rates accelerate and they start ripping higher in a big way. Because, and I think that's actually a good example of what we look for and a mental framework when you're thinking about analyzing these markets. What you're looking for is the weakest hand, right? When the maximum number of weakest hands are stepping into the market, that's a good sign. Now, when do the weakest hand steps in? Now, if you look at Google Trends, at the exact top, right? People who are brand new, punching how to buy Bitcoin into Google, opening up a 50x leverage long, those people are exactly the people you want to be selling to. Now, they are normally, when you see market, like let's say, for example, I think it was back at 55 before we sold off recently. So at the end of August, that rally, as we were rallying up into that peak, everyone was saying, oh, look, it's all good. It's a bull market again. But we all know that this thing is going to pull back at some point because it always does. It doesn't go up vertically forever. There's going to be some kind of pullback. And we started seeing leverage climbing at the peak, not 29,000 to 30,000, not 30 to 40, not 40 to 50, not 50 to 51, but at 52K. That's when everyone starts leveraging up. That is what you're looking for. You're looking for a steep rate of change when lots of people are piling in and going giga long at the exact top after most of the move has already happened. So that's what we're looking for. We're looking for when is the weakest hand moving in force, in big numbers, and opening up huge leverage. That's the kind of thing to pay attention to. So it is a very interesting dynamic, but that's certainly the kind of framework that I use to kind of assess these things. I'm looking for rates of change. I'm looking for when more and more people are stepping in and getting involved in the market. And are they the type of people who are going to get flushed out at the first sign of a red candle? That's really what we're paying attention to.
Hey, Chick, so we've seen this elevated transfer volume for the last few weeks. You pointed it out in the videos, and I've certainly seen it. And I'm wondering, since we're still seeing the exchanges just kind of stay flat, I'm wondering, where do you think this activity is taking place? Like, where is all this volume moving between hands?
That is a very, very, very good question. It's actually something that I need to dive deeper into. To be honest, I'm not sure. So my initial reaction when I first started seeing it was that it was probably something like an FTX, one of these exchanges that, Glassnode hasn't got in their exchange balance thing. And I know that they were also doing this peeling transaction, right? They had basically a huge balance that was like peeling off point 0.1, 0.2, 1, 5, which was throwing out a lot of the metrics. However, the Glassnode team they were aware of it, they factored it, and it's essentially been sorted out. So the answer is I actually don't know, but it is something that I need to look at. In fact, I need to drop a note into our data science chat just to really investigate this further, because I have started seeing it. I know that it's in pretty much all data providers are seeing this. So it is a very interesting phenomena. I'm not entirely sure. There's a good chance that a lot of it could be OTC deals. We're also seeing a lot of movement of coins, not coins, capital in and out of mining industry, right? Remember the US and the US is essentially adopting or becoming the home of many of these miners, right? I don't know if any of you saw that bar chart that was floating around on Twitter yesterday, but it basically showed, China's dominance in the mining space start to just massively decline, and I think it's Kazakhstan and the United States just shoot up. US now being the highest. And I've also heard from who was I talking to about this? In fact, I think it was the Glassnode guys. They were saying that there are some instances where miners actually are buying; they're net buyers, and the principal thing, if I was to kind of just throw a dart and have my best estimate as to what's going on. Dom, it is showing up in the mempool, but you're seeing large transaction volume, large coin volume, not many transactions, right? So it's not pushing up fees, something like that. So there's two takes. There's two examples of what I think this might be. Bet is that it would be some kind of mining OTC deal. I don't know if we're seeing huge numbers of coins moving from, Chinese wallets into some other wallet. We're not seeing it yet in the mining space, that in the mining metrics. And I don't know if that's because it's like self-spends. They're literally moving it to new wallets and transitioning all that around. That is possible. The other option is maybe it's custodial solutions, right? We're seeing something internal within Coinbase that's actually moving a lot of this volume, setting up some kind of custody arrangements, things like that. But the answer is I actually don't know. It's something I look into. Now that it's become about a month-long trend of fairly elevated volume, it's something that probably does need further investigation. But yeah, it is an interesting trend to be paying attention to for sure.
Yeah, and I look at the OTC desks, at least the ones that Glassnode tracks, whichever those are, and the holdings don't really show anything, and I haven't looked at the flows themselves, to be fair, but when I just look at their overall balances, they're pretty kind of not notable. And so it's either an OTC desk that Glassnode doesn't track, or it's some other, like you said, it's something else that's going on, some other, maybe self-dealing that isn't getting picked up by the entity adjustment just yet, or I don't know what it is, but it has been going on for a few weeks and it's consistent. It's kind of bouncing around in a range, which suggests that it's a new behavior and it's not just like some kind of one-off anomaly.
Yeah, it's definitely very interesting. So leave it with me. Let's investigate and we'll see what we come back with.
I was going to say, Chemi, I got a bit of a theory that, if Bitcoin rips really, really hard for the next 6 months, I think gold's going to have a real negative time and everyone's going to sort of like go negative and hate gold for a while. And I was going to say, when Bitcoin topped out, maybe gold would be the best thing to move into, as in safer than fiat currency. Do you mean? And hopefully there might be a swing back towards gold if everyone sort of thinks that that Bitcoin's hit its top. Do you know what I mean? What do you reckon?
I'm actually not opposed to that view at all. I think that in fact, something in my gut has been telling me that gold is ready to go. I mean, what we're basically seeing, and I think this is kind of all in the macro context. We've now seen, I put out a meme the other day, the one where the clown is getting dressed up, right? Starts by putting on the makeup and then the wig, then the nose. And it's essentially stepping through all the phases of inflation, right? There is no inflation. Inflation is transitory. It's going to persist a little bit longer, and inflation is good. We've already hit the point where the clown is fully dressed and they're telling us that inflation is good. So we're at this point where, central bankers are now starting to say, oh, well, maybe it wasn't transitory. It's like, surprise, no shit. So we're at this position where I think real rates are seriously going to get pushed into the negative. What I think is going to be, I mean, we're seeing strikes, you're seeing wage inflation, oil is up, trading up about $80, natural gas is through the roof. I mean, these are all input costs. If anybody doesn't follow Doomberg, I think they handle as Doomberg T on Twitter, but they've got a Substack. Very few things I can recommend higher than that.
Doomberg is awesome.
Dude, it's fantastic. They're so eloquent, and they're writing. What I really like about it is they get their point across in like a 3-4 minute read. So it's a really, really quick read, but you get, a real nice insight into what's going on in the world. And it's just completely bonkers, right? The way that the world has handled this green transition by literally banning things that are absolutely essential to human survival and flourishing, like, energy, is just out of this world. So we are going to see inflationary forces continue to pick up and carry the ball. And what does this mean for bondholders? Well, really, we all know that holding bonds is a very, very bad decision at this point in time. But the bond market is starting to get a whiff of this. And simultaneously, right, we're about to start seeing baby boomers retiring. We are seeing them retiring at an extraordinary rate. Right. So, and this is only going to continue. And suddenly all of these liabilities start coming in, unfunded liabilities for these governments, where they owe these people pensions. And there's no money to cover this. Like, they don't even have enough money to cover their $28 trillion in the US. And they've got another $150 trillion worth of unfunded liabilities coming down the pipeline in the next 25 years. So, the unfortunate reality is that I think inflation and the money printer is going to keep going. And the central banks, their job at the moment, quite frankly, is a confidence game. They need to keep inflation expectations, right? Expectations, not the actual thing. Because what they do is they generate whatever their core inflation or their CPI number or whatever it is that there is their metric that they use, that the bond market uses to calculate their nominal minus the inflation gives you the real yield. And the government is providing that official inflation rate. So even though we know that inflation is more than 3-4%, whatever they're saying it is at the moment, high relative to standards, they're not going to ever tell you that it's actually like 15%, right? Because they change what's in the basket. They hedonically adjust it. Some of you may have seen these clips of people being like, oh yeah, but if you take out things like bread and energy and rent, then inflation is basically non-existent. It's like, yeah, but they're the 3 things that people buy a lot of, right? You need those things. You can't remove that from your inflation calculation, but they do. And the reason that they do is a confidence game. They need to get inflation, period. They must generate inflation because the debt burden is so large. They must make the debt smaller relative to their current dollar value, right? They inflate away the debt. But they need to inflate away the debt without spooking the biggest market in the world, which is the credit market, the bond market. If the bond market starts selling everything, the only option that they have, because that when you sell bonds, the interest rate rises. And when you have a society that is as indebted as what we currently are, interest rates cannot rise, right? So the problem is that they're going to, if you start generating all this inflation, then the pressure for the central bank to raise the interest rate goes up. And then by raising the interest rate, you threaten the whole system with a collapse. It's a really, really bad situation all around. So I think overall, that's the kind of problem that they're trying to solve. And I think I saw an interesting take yesterday on Twitter. Someone was saying, do you think that inflation and overall inflation is good for Bitcoin or not, and the crypto market at large? And most people are clicking yes, 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 because this inflation hedge narrative is actually kicked in. My view is it's actually not a good thing. I don't think inflation is good for any assets. Why? Because it increases the probability that the central banks will have to raise interest rates. As soon as they raise interest rates, it's all over. Now, I do think that they will have to very quickly go back to zero, right? I think they'll raise it, the market will absolutely collapse, and then they'll have to go back to zero. So I think it's a temporary shock. It's a March 2020 style event, and it would essentially be a mistake or a blunder on the chessboard by the central banks. However, I mean, look around at the leadership quality that we've seen globally, everywhere. Making mistakes is kind of in their modus operandi, right? It's pretty expected for them to make an absolute bungle out of anything that you can see. So my view is that the central banks are in a seriously bad position. They're trying to convince the bondholders not to sell and that everything's okay and that the official inflation rate is transitory and it will go away. And then they'll shift the narrative to saying, well, inflation's going to stick around, but it's good, right? It's good for the system. It shows the economy is healthy. We're not quite ready to raise interest rates. But what they don't want is this unchecked inflation where it just starts absolutely mooning. They can't keep it under control. And unfortunately, that is starting to get to the point where it probably is going to get a little bit out of control. They have the guise of supply chain issues, which are very, very real, right? There's things here in Australia that we can't get for the next 12 months. There's backlogs on all sorts of supplies here. I mean, we're an island nation, and we can't ship a damn thing in here. We already have what we call the Australia tax here, which is just because it was always more expensive to ship things here. And now it's going through the roof. So the cost of living here is going up quite substantially. Thankfully, we're food producers over here, so no issue on the food front yet. But I do suspect that all that's coming. But I do believe that we're in an inflationary regime right now. I think the main thing to watch, and quite frankly, the biggest macro risk that exists is the central bank's response to all of this. Do they try to raise interest rates? Do they go for the taper? I think they will taper, and I don't think that matters. What matters is interest rates. If they try to raise interest rates, I think they're going to have a bad time, and I think everybody's going to have a bad time. So that's my kind of overview on the macro situation, and I think that the central bank decision is the biggest risk that we face coming ahead. Any other questions or things you want me to cover?
A lot of folks in here. Don't be shy.
I've got a question for Mav actually, if he's listening. Mav, are you there?
Hello.
Hello, buddy. How you doing?
Good. How are you?
Very, very good, thanks, man. I've been enjoying your NFT newsletters, Jermaine, and I've got a question for you because with the NFTs, I get it's all like the digital sort of art and stuff like this, but if someone wants to put, like I've got a friend of mine who's like a really good artist, Jermaine, doing, hand stuff. What's the best way for them to put sort of to turn it into an NFT? I mean, because they asked me the other day, and I was like, well, I don't know. I guess you'd have to like take a photo and just, take a photo of it and put it on, create that into an NFT. Is there a better way of doing it, or is there any other techniques or ways of people doing it? How are they turning, hand done art into sort of NFTs?
Yeah, this is a great question because you're right. I have been writing some articles recently about kind of like the recent surge in NFTs and interest in NFTs and how that's translating to kind of broader opportunities within the crypto space. Where is that trend going? Because in one part, it's not just about art and collectibles anymore. It's starting to be kind of representative of, in a lot of ways, the ICO kind of phase of the crypto markets, both for good and bad, and just kind of like opening up to new directions in that way. But to more specifically answer your question, I would say that, yeah, it is a little bit of a, with regard to like a physical art kind of piece, it is a little bit haphazard, if shisty in some ways. You can certainly sell a photo or anything like that, but I think predominantly NFTs are synonymous with like digital art, digital items. So yeah, as it relates to how to sell that, right now OpenSea is the biggest, both by volume and just different things out there. But quickly, we're seeing a lot of the centralized exchanges hop onto the bandwagon. For example, Coinbase announced yesterday that they're going to be doing a NFT marketplace, and already they've signed up over 1.1 million people to that. So it's very quickly we're seeing there be an arms race between a lot of the centralized exchanges as well as the decentralized ones with regard to NFTs. Now, I'm sure if I continue to talk about NFTs, I'm going to cook Checkmate's noodle very quickly. But yeah, it is definitely an emerging space. It's definitely with DeFi kind of, I wouldn't say plateauing or anything like that, but not growing in the same rate that it was maybe a year ago. NFTs have kind of taken over a lot of the conversation as we're seeing it expand into things like, NFTs for games and NFTs for just a lot of these other areas that it'll branch into. So yeah, it's just it's an exciting, confusing, maybe a little bit silly new sort of venture, but definitely represents a lot of that like crypto enthusiasm that reminds me of 2017.
Strangely enough, I'm actually I'm on board with the NFT thing. I understand it now. And this is the thing, right? I like to actually just experiment and test these things and actually, put some money, put some skin in the game so I can actually make a proper assessment of things. And I never quite understood it. I obviously bought my current profile picture. That was kind of my first check on these things to see how it works. And I got it. However, I did understand it. And buying the profile picture was it was the right step. However, I then rapidly found that I couldn't bring myself to spend more money. And like I bought a handful of them. I was like, yeah, you know what? I'm just going to get out, right? I just wanted to get out of the position. It wasn't something that once the novelty wore off, I kind of got over it. That, however, has started to evolve and change. So I think my core issue actually, and this is something that I'm coming to terms with. I put out a thread on this yesterday that I'm still forming the opinion of. But as you know, I've been pottering around on Stacks, just trying to understand more about how that whole ecosystem works. And what it kind of solidified for me is the primary reason that I didn't find the NFT experience lasting for my Ethereum NFTs was primarily actually because of the blockchain. So I actually, and this is something I'm coming to terms with, I do not trust Ethereum as a base layer, which, surprise, I don't trust it as a long-term solution. When it comes to the digital art type thing, ultimately it's just scarcity. It's the exact same trade as Bitcoin, but it's non-fungible, right? The concept is that if you are buying one of it's like a land grab. If you're buying one of these first pieces, then you start talking about, it becomes a status symbol. It's a flex. It's a measuring contest. What people are doing is they're buying these things because it shows that they have disposable income. They're buying it because they like them. They're buying it to support the artists themselves. It's one of, 10,000 or one of whatever. It's this cultural phenomenon where everyone else is buying one, so it kind of fits the brief. And, you want to be part of that club. It's an exclusive type system. The other thing I found interesting is that when you go to try and sell them, there is more of an attachment, right? You're not necessarily individually attached to a particular UTXO, right? It's all Bitcoin. However, you can become attached to a particular artwork. And even ones where I was like, yeah, I'm not that crazy about it. It felt different to try and sell it, right? It was also a pain in the ass to try and sell it because you've got to find someone. It's the illiquidity. As soon as you buy one of these NFTs, you are immediately reminded that you can't just market sell, right? It's a very, very different problem when you go to sell these things because you can't just market sell. You have to actually literally wait for someone to buy your NFT amidst the pool of all the other NFTs. So therefore, if you're buying these things as a speculation, I don't fully understand how that has to be a long play. As far as I'm concerned, flipping these things just feels like complete madness. I think that phase is probably done, and Mav mentioned it was very much like the ICO type thing. The reason I've been playing around on Stacks recently is I actually trust the blockchain itself much more than I trust Ethereum for a whole plethora of reasons, which I'm still kind of coming to terms with, but report coming on that soon. But the thing that I kind of have recognized recently is that because I trust the Stacks chain to survive long term, I trust it a whole lot more than Ethereum to survive long term. I actually feel more attached to my the artwork there. And I also think that if it's basically a pure play bet on that blockchain, you could buy the asset itself. But the thing I like about Stacks is that they designed it to be gas. It is gas. It's not trying to be money. It is just gas, right? And that is kind of the core use case of it. But NFTs essentially represent like a land grab of the first plots that are built on this thing. They become the collectibles of the market, right? Plus, I really like these. I'm looking at the blocks. I mean, I'm looking literally on the same screen as I'm talking to you right now. I find myself scrolling through them every single day, and I'm not an art person, but I just find myself attracted to these things. I think they're interesting. I think they're, the generative pieces are cool. They look like chessboards, which is kind of up my alley. There's all these things that just something about them I want to collect. I want to collect them. It's what I want to spend my money on. It's the first time that I've been spending my crypto assets on things that I actually want to buy for myself. The only other thing I ever buy is cold cards and block clocks, right? That's the only other thing I ever spend my crypto on. So there is something here. There is something in this NFT thing. I never really thought about what it is until recently, but I'm coming around to it. I get it. There's going to be a lot of uses for NFTs like tickets and all that kind of thing. However, I do think the core play on it is you're basically buying real estate that is visual, it's attractive, and it's something that is kind of your stake over the first sections of the network. And I do believe there's going to be a very long tail. I think NFT art projects that launch early in a blockchain's lifetime, right? The first couple of these things that launch in the blockchain's life. This is why Bored Apes and Punks and these Ether rocks, this is why all of these things have huge value, because they were the first ones. They're the land grab inside the blockchain, and each blockchain will have their own version of these. And if they're knockoffs, they're always going to be priced less than the original. And I think that's the core trade amongst all this kind of thing.
Yeah, definitely. Because you saw like even Soul Punks went up really high, haven't they? Do you mean, and even Stack? I think Stacks have done their own Stack Punks as well. Do you mean? I think they've gone pretty. Some of those have sold for some quite high amounts. Do you mean? So yeah, it's definitely it's still, like you say, it's just the initial ones on those chains that are just like doing really well, aren't they?
Yeah, that's my core thought. I just think I think it's a land grab. I think it's owning a collectible, right? Let's go back to Bitcoin's origins. It starts as a collectible. These things will never be money, but these are the types of things that people will spend their money on. So there was a tweet that Suzu put out recently, and in many ways, I've actually become less inclined to pay attention to Suzu of late. I know he's very big in the DeFi scene, and he's got very good calls, and he's able to move money. But I just think that he shills his bags a lot. So I'm skeptical when I kind of see him tweeting about stuff. However, one take that he put out recently that I do, Dom, CryptoKitties are worth something. I know it's more than zero, so they do have some kind of thing. But the punks actually predate the kitties. I think most people don't realize this, which is why they're so valuable. But anyway, Suzu put out a tweet the other day saying the thing that's going to actually force Bitcoins or cause Bitcoins to spend their money is probably going to be NFTs. And I am actually coming around to that idea because I'm a Bitcoiner. I'm on a blockchain that is, arguably probably the most native and friendly blockchain to Bitcoin. And I'm spending my money on NFTs, right? I'm a Bitcoiner. It's the one place that I haven't deployed my corn. This is fresh fiat. But I am deploying capital that I would otherwise put into corn. It never quite got there because once it goes into sats, that's just it. It never comes out again. So I've been actually deploying capital into this because I want to as a Bitcoiner and as a Bitcoiner who's not an art enthusiast either. So I do believe there is some credence to all of that. And that's what my thread on Twitter the other day was yesterday. Whatever chain or system, I don't care if it's RSK or Lightning or Stacks or Ethereum, whatever it is, whatever chain manages to mobilize the 85% supply that has not moved in a year, once they mobilize that corn, that is the killer app, right? The DeFi chain that gives access to Bitcoiners to lend, to borrow, to collateralize, to buy NFTs. Once that corn starts moving, that is when you know you've come across a system. And I do believe that there's a good odd that that won't have a token, right? Which obviously goes against the whole investment case for Stacks. However, I also think that Stacks is a very clever mechanism where it's quite symbiotic. And I mean, even Dan Held, right? The most moronic maxi of all time is writing about Stacks in relatively favorable terms. So if there's one thing, this is actually my bet on Stacks. I think it's the chain that has the highest potential to break maxis. And the way that it breaks maxis is by offering them tools to mobilize their BTC natively on chain and get access to DeFi services. Whatever chain can achieve that without pumping the system full of tokens is a very, very sane bet. So that's essentially the trade. And quite frankly, the easiest, the simplest trade on all of that is just own BTC, because the core fact is that BTC will be immensely valuable as collateral in this whole system. And that's ultimately what the trade's all about.
Yeah, definitely. You know, well, where are you looking at the art on Stacks? Which
I'm looking at it. I'm looking at it on stacksart.com. Let me send a link 1 second.
perfect. And with regards to Stacks, what's your comparison between that and Sovereign? Have you been comparing between the two, or?
So I've not used Sovereign yet. If I understand correctly, Sovereign is on... I've looked at their website, and the description of how to start using Sovereign was so disgustingly complicated that it lost me. Right? I literally looked at it, I do not have the time. I do not have the time to work out how to do this. So they've got a long way to go in fixing that problem. Now, there's two things that I need to fully comprehend. I'm trying to build up this research piece. It's probably going to end up being more than one. But to really explore what's going on with Stacks and how it works and how it's different to RSK, right? So RSK is a side chain which doesn't have a token. Stacks is I don't know if it's a side chain. I don't know what it is actually. It's kind of unique. It's a layer 1 blockchain, but so is RSK, but it does have a token. And the mechanism that basically for RSK to work, it's a merge mine sidechain, and merge mining means that you need to convince Bitcoin miners to also support the sidechain. Now the problem with merge mining is you can, in some instances, have a very large miner essentially capture a large... It's much harder to have decentralized consensus on a merge mine sidechain. Now, one could argue that there's going to be MEV, right? As soon as you introduce smart contracts, you introduce MEV. There is a high probability that once you introduce MEV, this is kind of my problem with merge mine sidechains, and actually all sidechains that influence Bitcoin miner incentives. Once you introduce MEV of some form, you change the mining incentives and therefore potentially affect the Bitcoin security model. And that's something that I'm not that cool with. It's also why, as much as I like at a high level drive chains, which are similar concept, there's something about giving Bitcoin miners, the guys with ASICs, there's something about giving them more power that I'm not cool with. And even though I think that the mining industry is just a whole new ballgame, we're not talking about Cowboys of 2017. It is a new ballgame now. There's something about it that doesn't sit right with me. I've seen happen in Ethereum terrifies me, because I think that changes the game. I think it destabilizes everything, and I think it needs to be avoided at all costs. So I'm not yet convinced exactly how Sovereign and RSK and all of that changes those incentives. Stacks, on the other hand, the way that it's designed, factually does not affect Bitcoin miners. Anybody can mine. It's a whole different system, which I will explore in more detail. But essentially, the introduction of the STX token is how they've essentially broken that link. There is trust requirement in an RSK-style sidechain that is not present with Stacks. Now, the trade-off there is that you have an asset, which some people will say, why do you need an asset? the insiders definitely have a larger stake than is desirable. I think it's something like 50% to people who invested in the thing through the start. So that is certainly a downside. I need to investigate more how the consensus mechanism actually ticks over, because it's not proof of stake. It's different. There is some layer to all of this in terms of how the actual consensus mechanism, I'm still trying to wrap my head around it all. But there are differences between the two. Either way, the user interface on Stacks is just orders of magnitude superior to RSK. There's a whole peg-in system for side change, which is a pain in the ass. What I like about Stacks is it can interpret Bitcoin. So Bitcoiners who never, ever, ever want to touch the STX token can still use Stacks DeFi, which I think is amazing. Basically, because Stacks can interpret what's going on Bitcoin, you can send a native Bitcoin transaction into a multi-sig that is established by one of these Stacks DeFi protocols, and you will then gain access to the liquidity and whatever it is. I'm not fully sure how it all works, but because it can interpret Bitcoin, a Bitcoin-only transaction, as long as you're willing to pay the Bitcoin fee, which will likely be higher, will enable all of this DeFi to occur. So it's an interesting dynamic. There is a comparison between these two. I'm not entirely sure how they scale, but I did see yesterday that someone's already developed a Stacks to Bitcoin Lightning Network integration. So you can now send BTC on Lightning Network in, and you'll receive Stacks back on the chain. So they're already starting to get Lightning Network to talk to Stacks, and this is starting to get fairly interesting, right? It's starting to look like a bit more of a cohesive stack that's all coming together around Bitcoin. So long term, my entire perspective, right? The last time that I had this kind of a big picture rethink of the space was when I found Decred, right? That was the last time that I rethought consensus, governance, security, how all of these things tick together, right? I was basically a Bitcoin maximalist prior to that. I found Decred. I started thinking about all of these dynamics in a new light. Playing around with Stacks is the first time they've been like, hang on a second, DeFi could actually come to Bitcoin. And now I'm actually more convinced, and I'm less confident in the Ethereum moat, even more so than I was before. And even Solana, I actually do think that Bitcoin is now starting to look like a bit more of a contender. It's a long way away, but I actually think that the smart contract space is undervaluing how likely mobilizing the dormant BTC and how much wealth that's going to generate, how much activity that's going to generate. I think that Ethereans are underestimating what can happen there, because most DeFi is junk, right? Most apps I've never used and I never will use. I use Compound, Maker, sometimes Uniswap when I can afford it. Those are the only things that I use. If you build those on some kind of Bitcoin DeFi layer, you're done. It's just it. Ethereum's dead. Why would you ever use it when people can mobilize the hardest, soundest money in the useful DeFi apps? I just don't see any kind of case beyond that. Plus NFTs. And here's the other thing. If the NFTs are going to survive because they're tethered to Bitcoin, I think most of us, if you had to put odds and roll the dice, Bitcoin's going to outlast Ethereum. I find very few arguments compelling enough to convince me that Ethereum is going to outlast Bitcoin. So as a result of that, you then say, well, if my NFT is tethered to Bitcoin, then that's going to last for way longer. I want my art to last forever. Suddenly that, I think they call it provenance, the fact that there is the confidence that those assets will remain indefinitely is actually why I'm buying it on this particular chain. Anyway, there was a lot of concepts and things in there, but I'm certainly way more bullish on Bitcoin DeFi than I was 1 month ago. So it's certainly an exciting experience. I'm enjoying going through this learning curve again, and I'll try and get maybe part 1 out this Sunday. Just talking about what I've found so far in Stacks, and eventually I'll do a full comparison between it, RSK, Liquid, all these different scaling solutions to just understand how they all fit together.
When Stacks moon, sir?
Oh, look, and again, here's the thing. The pure play on all of this is just BTC, right? Because BTC will benefit from literally everything that gets built on top of it. And the other side of it is that Stacks, a big risk, right? A big risk that I've been contemplating is if if the incentives that caused Ethereum to produce all of these shit coins, all these shitty tokens, if the same incentives create just an absolute token casino on stacks, then it won't survive. I just don't think that having lots and lots of tokens is going to ever attract Bitcoiners. It needs to stay clean. It needs to stay essentially tokenless. I find it bizarre that Sovereign went for a token, and even more bizarre that they went for a token that initially launched on Ethereum. That's a bad idea, fellas. What on earth are you doing? I get it. You're trying to build, but you're not going to attract the Bitcoin crowd by making a token casino. It literally goes against everything that they stand for. So I do think that there's some interesting dynamics in all of that playing out. But ultimately, the pure play on this, a bet on Lightning Network is a bet on Bitcoin. A bet on Stacks is a bet on Bitcoin. Everything is a bet on Bitcoin. On NFTs, NFTs is just a bet on Bitcoin, right? Because ultimately, Bitcoin's going to be the money that people want to acquire to actually buy these things, right? So having the wealth in the first place gives you access to those land grabs. So ultimately, corn is the centerpiece of all of this. But certainly the concept of DeFi, and I think I posted this in one of the chat channels. Most of the impetus behind this, and the reason I think Stacks has been talked about, is because Bitcoiners are finally coming to terms with. They've had the year to digest that DeFi is useful. It's not a scam. The tokens are a scam, but the protocols are not a scam. And if they can start building it, then they will get value out of it. And probably more importantly, they've recognized deep down that if they don't build it, they're in trouble, right? So Bitcoiners are coming to terms with the fact that NFTs are real, DeFi is real. They may not agree with how it's been built on Ethereum. I don't agree with how it's been built on Ethereum, but I do believe that we need to build it. And there's also a problem of how do you fund these things, and that's why the tokens come into it. However, now that Ethereum's done all the testing, right? They've tested all these models, they've built these systems, we've seen the economic incentives grow up, blow up, and everything in between. Bitcoiners can now step in and go, I like that idea, I like that idea, and I like that idea. Bang. Thank you for building it. Thank you for your time. Good night. Right? And Bitcoiners are so wealthy that they can fund it themselves. So in many instances, I actually do think that the porting over theory, I certainly don't believe it's going to end up on Liquid. I think Liquid is, and this shows the example, right? Liquid is a federated sidechain. I'm glad it exists, but no one's using it because no one trusts it, right? It's not useful for them. Once something is useful for them, we're going to see this corn mobilize. And whatever DeFi layer gets that is going to be one to pay attention to. And quite frankly, most of them probably won't have a token. And that means that the pure play here is just BTC.
I was going to say, Chetmate, Sovereign didn't start on Ethereum. They started on the RSK chain because I was there at the beginning. I bought the first ones on the launch. Do you mean? And you
Are
had
they
to,
trading on
yeah,
Uniswap?
they are. They since then they made an Ethereum token that then they made a bridge so that people could then buy on Ethereum, bridge it over to the RSK. So it's actually not. It's only just like it's a token.
Right. I thought that I saw somewhere along the line that they initially launched the token on Ethereum because it was the only one that they had access to. Maybe that was a different Bitcoin DeFi thing.
Yeah, it was because I was there at the beginning. You had to transfer Bitcoin in and you had to set up the RSK network on your wallet and you had to purchase it with Bitcoin. Do you mean so? It wasn't.
Interesting.
Yeah, no, it's good.
What is the pegging in process like, just from a usefulness perspective? How did you find BTC to RBTC? What was that bridge like?
That was easy. Yeah, I mean, what to buy? I haven't played around with Sovereign since, but to actually buy it, it was easy process. Yeah, we just transferred it in, and I can't remember. There was a page. Maybe it was on their own page. They just had a transfer straight across, and it was like within seconds. It was switched to it was on RBT. That's right. It was RBTC,
Yeah.
and then you bought it with RBTC. You changed it up to Sovereign.
I had a different experience with that. So to transfer from BTC to RBTC, they make you download a browser extension called Liquality. And that only actually works in Chrome. I don't use Chrome. So I had to download Chrome to download Liquality to send my BTC to this like MetaMask-esque browser extension to then change it from BTC to RBTC to then buy to then interact with Sovereign and, buy the SOV token and whatnot. And I still have some SOV in that extension. But yeah, it wasn't the easiest thing in the world.
Yeah, and look, it's one of those things that feels like that's because it's so early, right? They're still going through all the motions of setting these things up. But, you essentially highlighted, and actually something I've become very aware of recently is how poor Ethereum UX is, right? And again, Ethereum UX is still way better than the bank, right? There's no question. Everything in crypto is better UX than the bank. However, I've played around with Phantom Wallet, which is the Solana equivalent to MetaMask. I've played around with the Stacks equivalent, the Hero Wallet. Now, when I go back to MetaMask, man, it's antiquated. There's so many problems with the MetaMask extension. I mean, I can't, after EIP 1559, I cannot for the life of me understand what the hell is going on with the gas fees now. It's just, I have no idea how to sort this out now. I just avoid it at all times. But, as Dom mentioned, extensions are attack vectors, UX is a long way away. With the user experience for crypto is probably one of its biggest Achilles heels. It's also the opportunity for people who are early, right? Because you essentially get to try these things out before the crowds get here. But I'll tell you what, that is certainly something that needs a lot of work before it's ready for prime time.
For sure. Yeah, I was just testing out actually MakerDAO the other day and opened a vault, and I got a bit of way into it, and I realized that the fees are just killing me here because I misestimated what they were going to be, and I wanted to close the vault, and so I did a bunch of Googling because it's not obvious how do you close this thing. Realized you can't actually close it, and so I had to change it. You know how they have just a regular vault you can borrow DAI against, and then you have the ETH amplifier vault. You have to change. I had to change the type of vault to an ETH amplifier kind of vault to amplify my exposure to ETH, which I really do not want to do. And only then can you actually close it, which is just mind-boggling. Really, really complicated.
Yeah, totally. It's a situation where I think they have what they call a dust limit. So you can only, you have to borrow a minimum of, I think it's 5,000 or 10,000 DAI now. So you have to borrow a minimum amount, and you also cannot close your vault if you don't pay back you can't have less than 5,000 DAI debt, whatever it is. Mm-hmm. It's complicated. Yeah, and then to do that, you need to have more than that DAI in your wallet. And because you don't want to have a spare, $100 worth of DAI, you then have, you've got the spare, 5 DAI in your wallet. You're like, what am I going to do with this? It costs me more to send it. And it's a real pain.
Mm-hmm. And just the lack of a warning too, hey, gas fees are really high. Here, you might be thinking, here's the transactions I'm going to need to do. No, you're going to need to do more, and here's probably what it's going to cost you. So just bear that in mind so you can think, does this make sense for me? There's nothing like that. There's no warning. There's no, for the average pleb user, it's just a brutal user experience. I use that once. I'm never going to use Maker again.
Yeah, it is. It's damn expensive. Compound does now have a warning saying Ethereum fees are congested. Consider using it later. But that's my favorite thing. Me and my mate, we can probably close out here. I think we're past the hour. But me and my mate have a laugh. He jumps on the Ethereum Reddit on a regular basis, and invariably, every single day, there's someone saying these gas fees are really high. When's it going to stop? What do I do? And invariably the first answer is just wait until gas fees are lower. It's it's kind of not the point, guys. It's like saying, I really need to go to the shops. But petrol's too expensive. Just wait for fuel to get cheaper. This is not how things go.
Oh man, ridiculous.
Yeah. No, that's good, folks. I think we covered a lot of ground in that one, but certainly as you've got questions for these things, I like these weekly calls so we can kind of hash out in real time and discuss all the various topics and happenings in the world. But as always, if you've got any questions or topics or things that you want covered, whether in this call or any other conversation points, as always, just give us a ping and we'll see what we can do.
That was great. Thanks, guys. Thank you very much.
Good on you, folks.
Cheers, guys.
Cheers, guys.
Cheers.
Cheers.